Welcome back. Still tuning to India Now, and we're being bombarded by all the earnings which are coming in post-market hours. And now it's the turn of SBI. They've delivered a PAT performance of 2,420 crore rupees, but remember, this is just according to the agencies. We'll have to just dig up the press release to find out what exactly they have put out. 2050 is the number that we were going down with, so healthy, I'd say, in terms of a PAT performance for sure. So that's what they've delivered in terms of their profit performance. Some of the internals have started coming in. The gross NPA divergence stands at 23,240 crores and the net NPA divergence at about 17,420 crore rupees. The divergence in provisioning is at about 5,720 crore rupees. Fairly important when it comes to SBI's numbers. You note that we're looking at the standalone numbers now because it includes the merged associate banks as well. And they've started reporting those numbers with the merged associate banks from Q1 FY18. Right now, the year-on-year numbers wouldn't exactly or strictly be comparable because last year we did not have the merged associate bank numbers. Anyway, for now, they've delivered a PAT performance which seems to be higher than what the street was expecting. Take a look at their gross NPAs, 10.4%. So that's come in a little bit higher than what they delivered last quarter at 9.83%. The net interest income has come in a little bit below street expectations, 18,688 crore rupees. We were working with an estimate of close to 19,150 crore rupees. So the absolute gross NPA figure has gone up on a Q-on-Q basis to come in at 1.9 lakh crores, was about 1.8. So you have seen a mild deterioration in the overall asset quality in the quarter gone by. What we'll watch out for as well is as to which of the accounts which there has been stress, because we are expecting that the slippages by and large would remain high perhaps, and net interest margins could perhaps be stable on a Q-on-Q basis. Treasury income is expected to be lower, and loan growth on a Q-on-Q basis could be muted this time around. So those are final numbers on the screens. Looks like there has been a slight deterioration in the asset quality, and you have the net interest income, which stands at about 18,688 crore rupees. I think we have, okay, we'll just be getting Poonam in a short while from now to talk a little bit more about the internals, but I'm sure she's out there scurrying about giving the numbers to our teams to flash it out on the screens. We don't have with us the PAT number at hand, so I'm just going to open up that press release in order to try and cull that number out. But I think that it's been a fairly decent number by way of the overall PAT performance. Like I said, lots of monitorables that we will be looking at closely as well. So just gonna wait by for what they have delivered. Yeah, it is a loss because I was looking at that and I wanted to do a double take, but it seems like they have put out a loss in the quarter gone by on a standalone basis at 2,416 crore rupees. Like I said, the number is not...
Major sale of investments in this quarter. And third thing is, of course, the provision and payment for employees, because from November 17, the wage negotiation or wage settlement has become due, and bank consciously has decided to make provision, which is about 700 crore. So as a combination of factor, and on the top of it, in December, keeping in view the risk-based supervision for March 17, a few assets which otherwise were in stressed assets category, they have been put in NPA category, and consequently the provision has been made at an enhanced level. The PCR has gone up by more than 100 basis points. And if we look from June quarter, the PCR has improved by 600 basis points. So more and more the bank's strategy has been to align the provision with the expected loss. So that has been the conscious strategy which bank has been following. And this is a combination of these factors which has resulted in the quarterly loss. But there are many positives which also needs to be taken into consideration. One is as far as the slippages are concerned, and if the situation is compared with the previous year, the slippage ratio has come down, and even in absolute terms for the 9-month period for the merged entity, the NPAs are much lower. The growth in retail continues to be robust, and SME particularly because of a couple of factors. One is the internal delivery mechanism which bank has put in for SME segment, which includes more feet on the street, changes in the lending method, and availability of cash flow data, plus the changes which the government has brought about in SME lending. As a result of this, for the first time in this quarter, we have seen a robust growth in SME. Housing loan, auto loan, personal loans, which does not include credit card for us because these are housed in a separate subsidiary. So they all are doing very well. And another issue which needs to be considered is that the merger of 6 banks. So bank has been now able to completely absorb, and the performance of the bank as a whole on the retail front has started signs of improved performance at all levels. There is some improvement in NIM, very marginal. Other income, as I said, that if we set aside the treasury income and the investment or one-time item which came in the second quarter, the other income is showing a good growth, be it income from government business, miscellaneous income, write-off, cross-sell income. On all fronts, bank has been doing very well. NPA slippage in this quarter has been 25,836 crore, but as I mentioned that these assets, 90% of it was already in stressed assets in one way or another. But now they have been recognized as NPA, and taking into account the supervisory review of the bank as on 31st March 2017. While reviewing the performance of the bank for this quarter or this year, this has been a challenging year for the bank and banking industry as a whole, and SBI, of course, we are no exception. But here I would like to mention a few facts that every cloud has a silver lining, and going forward in 2019, our estimate is that we will be able to contain our fresh slippages as well as the credit costs within 2%. And 20, our target is 1.5%, and this should result in an ROA of 0.6% for the bank in 2019 and 1% minimum in 2020. That is the target. Bank's focus will continue to be supporting the SME sector, and a few enablers which have been created by the government and Reserve Bank of India in the latest monetary policy, they are going to be very helpful in banks' growth of SME sector. As I mentioned in my remark earlier, housing loan, auto loans, we continue to be the leader and have been able to maintain the market share at the existing level, which is more than 30%. All our subsidiaries, they are doing very well, and there is a lot of value in the subsidiaries. Their results are available, and they have given enhanced performance which is very satisfying. One major issue is around the capital infusion. So board has already decided today to issue preference shares to the government to the extent of 8,800 crore, which is part of the recapitalization plan of the Government of India. And as a part of MOU which bank is signing with the government, apart from certain reforms which are expected from the banking sector as a whole, and SBI being part of that, we are signing a MOU with the government that 20,000 crore will be raised in the next financial year by the bank and without Government of India subscription to it. So on the whole, the current quarter definitely is disappointing, but as I said that going forward there is a lot of optimism, and the entire strategy of the bank, the focus on profitability, the focus on return on assets, the focus on rebalancing the portfolio. So all that work is very much in the final shape, and from next year, starting from 1st April, we will all start on a very positive note. So these are my opening remarks, and then I am open to question one by one.
Priyanka. Sorry.
Okay,
Sir.
sir, the divergence, could you just break that up for us? How much was added to the NPAs and also how much additional provisioning only on account of divergences?
So approximately 23,000 crore was the divergence, and provision is about 6,000 crore, approximately. But when we say divergence, one thing I would like to clarify, that all these assets, 90% of them, they were in the stresses of the, so it is only a question of timing. So where the supervisors feel that in March 17 they should have been classified as NPA, but bank has classified these accounts as NPA in these 9 months.
Were any of them standard assets as of the third quarter before you, the RBI took place?
No, RBI, yeah, please.
There
Sure.
was an account of 2,835 which was an NPA before the divergence in
Yeah.
June itself, and there is an account which has been upgraded subsequently as well.
About 19% has been upgraded in December quarter.
Could you just repeat the number of the fresh slippages during the quarter?
25,836 crore.
What's your view? Do you think that as far as the recognition, the fresh slippages are concerned, have they peaked, or do you expect this to perhaps still continue in the coming few quarters?
No, it has peaked. It has definitely peaked. So if you say 25836 in one quarter, so that is definitely the peak. It is not going to exceed this in any quarter going hereafter.
So how many of the slippages were from the watch list that you had earlier identified?
As I said, almost 90% is from the watch list. Only very few smaller accounts and one more account which was not in the watch list. So that is about 4,000 crore approximately.
It is watch list or standard restructured or S4 SDR.
Yeah, that
We are
is what
saying
all
that
is.
the total impaired asset pools that we had, out of that 90% is what has slipped is 90% from one of these pools.
Could you reiterate the position of the watch list at this point, how it stands? If you could tell us what the movement has been from the watch list.
Just the watch list.
Just the watch list, yeah.
It is now down to
10,834 crore. So that is the watch list as of date.
Remaining.
And for the bank, which has a portfolio of more than 19 lakh crore in loans and advances, this quarter we have given the watch list, but I think going forward we will not need this number at all.
So will you be winding down the watch list?
Yes, because now, as I said, that recognition part is now more or less over. Whatever remains, or whatever this is like quarter on quarter on quarter, and there is no need for the bank to declare the watch list anymore.
So would any incremental provisioning be required, since we are talking about the resolution phase now? Is there any part of it that still needs to be provided?
So on NCLT, we are almost at 60%, and we have to see, because some of the major accounts, they are still, the resolution process is on and the bids are coming in. So there will be many accounts where we are over provided, there may be some accounts where we will be under provided. On the whole, the overall NCLT 1 and NCLT 2 is 78,000 crore for the bank. So if there is any shortfall, say 5% or even 10%, so that is all within the manageable limits for the bank. It is not going to make any major dent anymore as far as the bank's profit is concerned.
So what is
one number that I was wanting. What was the gross slippage number for the third quarter?
25,836 crore.
25.
Sir, so of that 23,000 was from the divergences. So of the remaining amount, what was the area that these fresh slippages came
One
from?
thing, I just want to clarify on that, that 23,000, this RBI report is as on 31st March
2017.
for SBI solo. So what we, this quarter slippages, the outstandings change, the merged entity has come, so it will not compare the number this quarter.
Exactly.
What we have taken and March number. The divergence is as on 31st March for SBI solo.
Alright, but outside of that, the fresh slippages have seen
Are nothing
no
much.
lumpy accounts.
No lumpy accounts. Nothing.
Sir, so what is the, you said about 19% has already moved to the standard category or has been resolved in some fashion. What about the remaining 81%? What's your outlook on that?
On what?
On the remaining assets which were classified as NPA during the quarter. What is your outlook on that? How soon can you see them?
So that's what I'm saying, that particularly one is that this is an ongoing process, but NCLT 1 and NCLT 2, which is 78,000 crore, out of which 44,000 crore is NCLT 1, and that resolution will happen by April. So resolution plans are expected within February, and then there is a process. So NCLT win list is not going beyond quarter one, and not everything. Some accounts, minor 2-3 accounts, they will be even resolved before 31st March. But rest of the accounts will happen in the first quarter of the next year.
So what is the quantum of additional provisioning that remains for the two NCLT lists for the fourth quarter?
No, as I said, that we have to look at the overall trend. What is the trend emerging? But we are provided to the extent of 60%. So which I believe is a sufficient provision, and if at all there is some more requirement, that will not be as significant.
So the divergence that was reported, which sectors were these assets belonging to?
It is largely power sector, and there are many projects which are under implementation, and but there are like issues around like how do we interpret and this thing, but this is 14,000 crore is power sector.
Power is for 10,000. Generally, the breakup, if you want, the power will be 10,000. Diversified will be about 4,500. Then we have telecom, which is 2,600. And iron and steel, which is 4,400. And the balance is smaller.
Miscellaneous smaller
1,800.
accounts.
I'm just curious to understand what really led to the divergence, because you always have been prudent as far as your classification is concerned. So what really stoked this large divergence in the numbers reported?
No, it is all right. Like there is a supervisory process. So ultimately, it is the supervisor's views that will prevail. So I don't think we need to go into any detail into this issue. But the fact of the matter is that in supervisor's view, these are the NPAs. In our view, they were always under the stressed assets category. So it is only a question of timing difference. So I don't think I have to comment anything beyond this.
It's surprising because last year when some of the private banks were reporting large divergences, SBI did. But this year it's the reverse of the situation. So
No, but they might have declared their supervision, RBS report for March 17, might have happened earlier.
I'm saying
Yeah, that
16,
was that
So-
was the case, but the fact is, like Chairman is mentioning, that 90% of these accounts have slipped from one or the other category. Now, like we said in the beginning, 12% of those accounts, even well before the RBI report we got, we had classified in June itself. So these are stressed accounts. There are certain initiatives that are being taken in those accounts. If they don't pan out, they classify. It's basically, I would say, a timing difference, rather more than anything.
More than anything else. And your this divergence question, so depending upon when the supervisory report has come, so in some cases it came before September, so the West Bank said in September.
We are talking about 2016.
Yeah, 16th we didn't have any divergence.
Others had at that time.
So others had, but 16 we did not have any
also
divergence.
treasury side, what are the losses?
As I said, that 3,500 crore is mark to market, is straight, and the treasury income has also been impacted. So which is 1,000 crore against 3,000 crore?
1,000 crores against 3,000.
3,000 crore.
So 2,000 crores, the treasury income has got impacted, which is above the operating profit, and below operating profit, the mark-to-market provision, we had to make about 3,400 crores.
What else played into this operating profit decline of about 18%?
So we have told you one is the
Apart
treasury
from-
income.
Apart from the treasury?
And apart from that, when you declare any account NPA, there are some interest reversals also. And it is a combination of those factors. So largely treasury income plus some interest reversals.
2,000 crores is treasury income, and about 700 crores is the wage revision provision, which we've started making from 1st November.
What is the assumption in terms of the wage hike that you're using to provide?
So whatever is the historical, Prashant?
Prashant, would you like to?
Well, there you go. The country's largest bank, SBI, has come out with its results. Its post-market hours is certainly going to be a stock in focus when trading restarts on Monday. Certainly, SBI has not met the street expectations. We've also seen the third quarter asset quality worsen. So gross NP is at 10.4% as against 9.83%. That's certainly something to worry about, the worsening asset quality, and net slippages above 25,000 crores. I tell you what, with that, we're going to take a short commercial break. We have